Today, we're going to be taking a look at an article about one of the most reliable dividend paying ETFs in the game, and that is SCHD. Right now, the markets are insane, but as always, I'm going to continue investing and building up those positions that help to hold up my portfolio during the rough times. So, this article is titled SCHD Buy the Dip and Call It a Day. So let's review what they share here. This article does make comparisons between SCHD and the SPY, which tracks the S&P 500, but I just want to note that I do not invest into SPY. It has a high expense ratio that I don't think is necessary to have exposure to. I would go with VOO, SPLG, or if you use Fidelity, FXAIX. I'm putting in an order today to buy some SCHD. I'm filming this early in the pre-market, and the current price is $24.79. Year to date, SCHD is down 7.47%, but in comparison to the SPY, the S&P 500 is down 13.79%. With everything that is going on with the tariffs and the trade wars that seem to be coming, all of the sectors are being heavily impacted. But SCHD is one that I believe is a strong contender that is good to have in your portfolio in order to weather the types of storms that is going to be impacting us with all of these tariffs and changes that are upcoming. So, SCHD isn't just an ETF. It's designed to track the Dow Jones U.S. Dividend 100 companies. You're getting exposure to 100 top quality companies through this investment choice. Companies with strong balance sheets, consistent cash flows, which make it a reliable dividend payer. It has a 4.1% dividend yield, which is much higher than you will get with those investments that give exposure to the S&P 500, which are going to be about 1.4%. A low expense ratio of 0.06%, which is cost effective to keep more of those returns in your pocket. It's rebalanced in order to keep the holdings optimized for continued growth and the high standards that are required to be a part of this ETF. It has a beta of 0.625. And let me take a second to explain what is beta. A beta equal to 1 means that the stock moves with the market. A beta greater than 1 means that it's more volatile than the market, and a beta less than 1 means that it's calmer than the market. So with SCHD being at 0.625, it shows us that it's less volatile. It's built for steady growth and income. Now that we have passed Liberation Day, this is a look at the last week performance of SCHD. But overall, the entire market is looking like this. This is a very extreme time when it comes to our portfolios. But as I said, this is why we have to use these times to rely on our defense focus investments to provide stability as well as that steady dividend payment coming in. The sectors that are within SCHD tend to hold up better during these rocky markets that we're going through right now. Unlike the S&P 500 or a total US stock market ETF, SCHD gives you a higher exposure to staples, energy, healthcare, as well as industrials. Within their top 10 holdings, you have Verizon, Coca-Cola, Pepsi, Chevron, Bristol Myers, and Home Depot, just to name a few. When it comes to Verizon, they have a solid 6.3% dividend yield. You're getting exposure to Bristol Myers, which is a healthcare giant. And of course, across the board, Coca-Cola and all of these companies are steady dividend payers. Even when we're going through a downturn, many are currently undervalued compared to their historical averages. That means you're getting the potential of an upside when it comes to their share price. When it comes to SCHD, it has 11.4% 5-year compound annual growth rate. And that's how fast your money grows on average every year. This is important because it shows consistent growth over time. SCHD isn't just good for what we're going through right now. It's growing fast and steady. The compound income that it produces will contribute to you being able to grow your wealth steadily. And with most of my investments, I pair that dividend income with the drip. I reinvest my dividends in order to buy more shares and use that as a way to build up my position even more. So I know it's hard for some of us to buy the dip because we are overwhelmed with the way our portfolio is already looking. I know market dips can be stressful, but if you have a long-term vision, a long-term strategy, and gaining passive income from those dividends is a part of your overall plan, consider the opportunity that we have right now when it comes to investing. So within SCHD right now, there are several holdings that are sitting at attractive valuations. So by buying during this time frame, we could really be locking in that higher yield while these shares are on a discount. So for me, this one is a simple investment choice that fits into my overall plan. So let's take a second to talk about a couple of those investments within SCHD that are currently looked at as undervalued. But first, let's talk about PE ratio. That's price to earnings. It's the price, what you pay for a stock versus how much the company makes. A lower ratio means better value. When it comes to PE, one that I'll highlight is Verizon, which has a PE of 10.39 versus the industry of 13.61. It's below the normal average and it's still paying a strong dividend. So stick to your plan even with what we're going through right now. Buy regularly. Figure out what works for you as far as weekly, monthly investments in order to continue building out your positions. Reinvest those dividends. Stay consistent and think long term. So, overall, SCHD is not flashy. You might see it as a boring sleep well at night investment, but I'm okay with that because I'm looking at the power that it can have over time and the diversification and stability that it could bring when we are going through tough times like we are right now. So make sure to share comments. Let me know, are you invested into SCHD? Are you glad that you have investments like this in your portfolio when we're going through the volatility that we are currently? Just share your thoughts. Let me know if you are planning to buy more now that it has dropped below $25. If you're not already, subscribe, like, and hit that notification bell so you can keep up with all of my videos and live streams. Check out my referral links. They'll be in the description and pinned in the comments if you're ready to open a new account. We'll both get free stock and you'll be supporting the channel. And another way you can do that is by joining channel membership. Let's continue to stay informed. Realize the power of investing. Don't be shaken out of good positions in your portfolio. Give it time to recover. Share your thoughts and questions in the comments. Thanks for watching. Okay, bye.